Welcome back to Alpha Recap. Sarah here. Today we're breaking down a wild post-market day where AI headlines and a surprise inflation print collided. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. I'm excited to dig in. Matt here. Markets closed mixed, and there was a lot to unpack, from corporate moves to macro repricing.
So, quick snapshot. Cisco jumped. Big. Alibaba reported a shock to core profit, and the 10-year U.S. Treasury yield hit a new high for the year after a hotter-than-expected producer price index. That sounds like a lot. Where do you want to start?
Let's start with Cisco, since that was the headline grabber. The stock finished the day up about 14%. Why? The company flagged surging AI order flow and announced a restructuring that included plans to cut about 4,000 jobs.
Hold on. So investors rewarded both growth signals and cost cuts at the same time?
Exactly. The market reacted to a concrete sales signal, customers placing AI-related orders, and the expectation that restructuring would improve operating leverage. In plain terms, visible revenues plus a path to better margins.
So what really stands out here is the need for visible revenue, right?
Right. And the other thing is timing. Investors are rewarding firms that can point to actual contracts or orders today, not just research roadmaps for someday.
Okay, now flip the tape. Alibaba. That number was brutal.
Yeah, honestly, I was a bit surprised by the magnitude. Alibaba's core profit fell by about 84%, driven by stepped-up investments in cloud and AI. Management says these are strategic and capacity building, but the market took the hit hard.
So we had one company getting re-rated up because of visible AI orders, and another taking a huge near-term earnings hit because it's spending to build capacity. Two sides of the same AI coin.
Exactly. It illustrates a bifurcation. Some firms are being rewarded for delivery, others are penalized for front-loading investment. Analysts note both are structural AI plays. They just come with different earnings paths and different risk profiles.
And then the tenor of the day shifted when we saw the PPI print, right?
Yes, the producer price index print was hotter than expected, and the 10-year U.S. Treasury yield climbs to a new high for the year. That changed the backdrop. Higher yields raise the discount rate on future cash flows and make long-duration growth names more sensitive to news.
Which helps explain some of the pressure in the chip complex. Intel was down about 6.8% to around $120.61 on heavy volume.
Exactly. Semiconductor names are doubly sensitive. They respond to demand expectations for data center chips tied to AI, and they react to macro forces, like rising yields. When the yield backdrop shifts, you get rotation and more volatility.
Not a great day for chip stocks.
And the heavy trading volume, about 170 million shares, amplified the move. Big flows can change technical setups and trigger more selling.
Quick sidebar. Cerebras and other hardware names were in the headlines too.
Yes, Cerebrus's proposed IPO drew whispers of valuations as high as about 100 times revenue. That's an extreme multiple, and it's a real test of how far the market will extend risk appetite for early-stage AI infrastructure.
Wow, 100 times revenue, that's bold.
Bold is one word. The point is, those multiples are fragile. If the IPO comes off well, comparables could re-rate up. If it's tepid, you could see valuation compression across the hardware and server stack.
And there were a few other interesting smaller moves. Zeta Global and a couple of semiconductor names got attention in investor letters. Zeta was trading around $17, despite consensus forecasts implying roughly a 105% earnings jump next year.
That's a good example of disconnects between near-term estimates and market pricing. The market may be skeptical about visibility, execution risk, or just preferring larger, more liquid names for AI exposure.
So when we stitch this together, a few themes emerge. Number one, AI demand is bifurcating the market. Winners with visible orders are getting rewarded, while those investing heavily today are taking margin hits. Number two, macro repricing is reshaping valuations. The hotter PPI raised yields and tightened financial conditions.
Yes, analysts broadly agree AI is structural, but they diverge on timing. Managements like Alibaba's argue the returns are clear over the long run, while investors want conviction on when that translates to profit. Data suggests that timing matters a lot.
And number 3 would be rotation between earnings momentum and thematic exposure, right?
Exactly. A MarketWatch list showed several S&P names with soaring sales and expanding margins. Those earnings beats still drive multiple expansion. But thematic funds that are broadly exposed haven't necessarily captured narrow rallies concentrated in a few AI winners. Performance dispersion is high.
Small reactions, quick ones. Wow, right, okay.
Right, and to add to that, active managers who concentrated away from those winners felt the pain. It's a reminder selection matters in narrow rallies.
Let's walk through implications for different types of investors. Just informational notes here.
For growth investors, the AI story is still potent, but higher yields raise the bar for expected revenue growth. Winners with visible monetization are getting premium valuations, but re-rating risk is higher.
Value and income, folks?
Rising yields can create opportunities in beaten-up cyclicals and financials if fundamentals hold. The data suggests reappraising rate sensitivity and credit risks is prudent.
Active managers and concentrated funds?
They need to reassess concentration and liquidity risk. Some funds missed narrow rallies and underperformed, which underscores stock selection risk in a market where a few names are driving performance.
Fixed income and multi-asset investors?
Duration exposure needs active management. The move higher in the 10-year yield tightens policy risk, and rising yields can be a headwind for leveraged equity strategies and dividend growth plays.
Short-term traders and volatility seekers?
Big intraday moves, Cisco up about 14%, Intel down, created opportunities for intraday liquidity and gamma. Volatility may stay elevated around earnings, AI headlines, and macro prints.
We should also highlight a few strategic takeaways. Purely informational, no advice.
Yes. First, revisit duration exposure across portfolios as yields and inflation surprises reshape expectations. Second, differentiate between AI-exposed firms with contractable order flow and those with longer paths to monetize research and CapEx. The market is rewarding concrete revenue signals today.
Third,
watch hardware IPOs as a sentiment barometer. A strong Cerebras debut could lift peers. A weak reception could trigger multiple compression across the stack. And finally, monitor corporate cadence. Commentary on payback periods and concrete order metrics will be decisive for earnings-based valuations.
before we close, any final synthesis on why May 13th mattered?
May 13th reinforced a central theme for 2026. AI is the dominant structural story, but its market translation is uneven and conditioned by macro. Cisco's rally showed upside for companies that can demonstrate AI demand. Alibaba's profit shock showed the cost of aggressive investment. And the hotter PPI that pushed yields higher amplified dispersion.
Perfect wrap. Quick reactions, 2 lines. Interesting day, lots to watch.
Yeah, that tracks. Analysts note this is a discovery market. Winners are still being discovered.
All right, time for the takeaways. 1. Visible AI order flow is being rewarded. 2. Higher yields after the PPI print made long-duration growth stocks more sensitive to news. 3. Spending today on AI can mean sharp near-term profit hits, even if strategic returns are argued for the long run. And 4. Watch hardware IPOs and corporate cadence as barometers for sentiment and valuation.
And to reinforce the investment disclaimer, this is informational analysis only. Analysts note the risks and the data, but this is not a recommendation to buy, sell, or hold any security. No personalized advice here.
Great. That's our recap for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. Catch you next time.